IndusInd's Q3 numbers has added many feathers to the bank's cap. The bank's loan growth is at nearly 20%, margins at 4.27%. These are impressive. They've helped a sharp rise in the return on assets to 1.87%. Now that's really impressive, and a return on equity to over 15%. To give us an idea of how much of this is because the times are good for all banks and how much of it can be sustained, I have with us the Managing Director and CEO, Sumant Kathpalia. Sumant, thank you very much indeed, and many congratulations for a great set of numbers. The stock market has given you a thumbs up, a lot of buy recommendations and target price increases. But let me come to brass tacks. A great ROA, but do you see it going to 2 and beyond 2? What guidance can you give us on the ROA front?
So we've always said, first of all, Lata, good morning and Happy New Year to you. We've always said that our ROAs will be in the range of 1.8 to 2.2%. And I think we are in that range. You should see that moving up gradually. And I think next year onwards, you should see us at 2% ROA.
Okay. Well, what is now heartening is that your corporate loan growth is a tad higher than your retail loan growth. It's about time the Indian banking sector also veered around to that. But within the corporate sector, you're not giving too much to mid-corporates. Can you give us some granularity on whether we should smell any risks and whether you're happy with the quality of assets that you're lending to?
Yes, I think on the large corporates, we do lend to A-rated paper and above. But yes, it's a 3.5% growth quarter on quarter. I think we have taken up, we launched a new segment in the 100 to 500 crore. I think we are seeing a good growth there. I think on the supply chain finance, we're seeing a good growth. And I think the small and the mid corporates are growing at 11% for us. And I think that's where our growth is coming. This has been 3 years now. We've not seen any big flows out from there. And I think we are very, very cautious in the way we proceed on that. So we're coming from a small base, so the growth percentages look higher. But I think the growth is very, very granular, and the average ticket size in the mid-corporate is about 30 crores.
Okay. Well, now let me come to something which perhaps is bothering many banks, and it's very evident in yours as well. The net interest margin. 4.27 is impressive, but is this the peak?
We've always said we will be in the range of 4.15 to 4.25. And we've always maintained our book is such that it rebalances itself. So there's a fixed rate book of 50% and there's a floating rate book of 50%. So I think if you look at that, I think we are naturally hedged as a book. And I think we will continue to see these margins even if the interest rates go down, because I think the fixed rate book will take over at that point of time. And slowly if you look at the retail yields have only increased by 16 basis points against corporate yield of 37. And I think over a period of time, as the disbursements are at the higher rate, you will see the fixed rate book yields, which will come to around 30 to 35 basis points higher over a period of time. So I think it's a lag effect which is coming in the retail book, and I think we will continue to maintain these margins at 4.15.
It is not your assets that I'm worrying about at all. I'm worried about the liabilities. I mean, your current and savings account deposits are as a percentage of the total falling. It's fallen for all banks. It's fallen for you as well. And you can clearly see that you have to pay more to get your deposits. So that's why I'm asking, how much does it go? Would you be able to even maintain 4.15?
See, we have been able to maintain it. This was the talk which happened last quarter that they will not maintain, and the brokerages did say that we will come down. I think we did not come down. So as long as your corporate book gets repriced and is getting repriced, you're able to pass on the margin, and the retail book is happening at, the disbursements are happening at a higher yield. You're getting a repricing on that coming after a lag. You're able to reprice the business. Yes, it's 4.27, it may come to 4.24 or 4.30, but it's range bound between that number.
Okay. How much of your book is, of your assets are linked to external benchmarks?
So we have a book, 50% of our book, 20% of the book is linked to MCLR. another 20% is booked to external benchmark, and the other is linked to short-term rates, which is a short-term book.
Okay, okay. So would you say that going forward, I mean, almost everyone's expectation is either the Reserve Bank's rate hikes are over or at best one more. So people with fewer linkages to external benchmarks are at an advantage because, you know, you have more headroom to raise rates.
I think I told you that our book is very well balanced, and I think as the interest rate slows down and the hikes slow down, I think our fixed rate book will start giving us the real value, because we booked in the last 4 quarters disbursements at very high yield, and our disbursements in retail side have been very, very high.
Okay, well, now let me come to one part of your slippages which is pretty troubling, and that is the microfinance leg. There, you know, while your absolute value of GNPA is 525 crore, the microfinance GNPA is like 268 crore as the increase. Now, that is a little worrying. You have also disbursed a lot, you know, 8928 crores, but the book has not grown. Why that?
So first of all, the runoff effect comes into place. It's a base effect. So we were disbursing at a higher speed, and I think the runoff effect, because these are 12-month to 18-month loan, and the runoff effect. So we have a 3,000 crore runoff. So that should answer your question, that the book is almost static as a consequence of that. Second, I think on the flow side, I've always said that the rural economy is still work in progress, and we will see some turbulence in some part of the countries, and I think this is mostly coming from the eastern side of the country. I think it's going to stabilize in a quarter or so, and I think you will see a very stable book from Q1 onwards on this book, on this microfinance.
Okay, can you give us some more nuanced guidance on the slippages part itself? I mean, there have been slippages even from your restructured assets, a little bit of worries even on the CV portfolio. Just tell us what should be the asset quality that we should worry about.
So if you look at our slippages are down to 44 basis points, 40 basis points this quarter. And I think you would see the slippages going down as we move forward. The commercial vehicle, the vehicle side of the book will stabilize now going forward. And in Q4, you will see the stability of that book. I think the slippages came from one particular state, and that was because of the mining tax, which has been rolled back by the government. And I think a lot of companies which do commercial vehicles and construction equipment will see that type of slippages which will come in. And I think that's all rolled back, and you should see the impact coming back onto the book this quarter. I think on the microfinance, like I said, I think it will take a quarter or more before it stabilizes. And we have been very upfront in taking our losses, and I think we even take losses at 60 DPD if we feel that there is no chance of recovery. And I believe that you should be prudent in microfinance in taking losses. And I think this will be the last quarter, and going forward, we should stabilize at what we've said. Having said that, our guidance has always been between 130 to 150 basis points of credit cost this quarter. This year, I think we should come within that range, plus minus 5 basis points. And next year onwards, we should be at 110 to 130 basis points.
Okay, that's really good to hear. But you spoke about 60-day past dues and you know how you're worried about them. Now the banking system has to worry about them, because sooner or later you have to provide for expected credit loss. What is your SMA 2? In fact, your SMA 1 and 2?
So our overall SMA 1 and 2 is 28 basis points down, 32 basis points down from 52 basis points. So I think we don't have that problem, but you have to look at this ECL in the retail side also, which are not part of the SMA 1 and 2. And I think there are some advantages, some disadvantages. The secured lending book, I think you will see a very good take up. I think on certain parts of the book, you may see a certain hits coming in. So I think we are talking to RBI. RBI has asked for certain questions. We are going back to them. So I think overall, I think it should be neutral, but I think we have to see how each bank has created its behavioral model, and there will be some inputs from RBI on some of the parameters which have to be taken, and then we can decide what is the way forward on that.
Yes, I agree that these are early days. It's only a discussion paper. We will get a draft, and then you will get the final rules. and then you will get, in that rule, you will get how much Reserve Bank wants you to provide. But do you have a healthy capital adequacy. Do you think because of this ECL,
Correct,
you may have to raise capital just to be sure? After all, the market is very kind to banks at this point in time. It's very much in favor of banks at this point in time. Would you want to raise capital just to be prepared for this expected credit loss thingy?
So we've done all our simulations. The past simulations don't seem to suggest that we need to raise capital. Even our growth does not seem to suggest we need to raise capital, because our internal accruals are such that it's taking care of our growth. We still are at 16% CET1 and 18% overall capital adequacy ratio. So I don't think we need to raise capital, but I think we will take a call maybe by the second, third quarter of this financial year, depending on more clarity coming out from this discussion paper. At that point we will take, but in my view, I think our growth as well as the expected credit loss model will not make us raise capital as of now.
Okay, will not require you to raise capital. Okay, got that, Sumant.
No,
out of time.
Absolutely.
Out of time, but just wanted to know anything the Reserve Bank told you at all about the confirming the reappointment? Your reappointment?
No, not at all. We still await their confirmation.
All right. All the very best, Sumant, for the reappointment and for the next innings at IndusInd Bank. Thank you very much indeed for joining us. Great set of numbers. Okay, we have to wrap up on Bazaar itself. And the positive part is now the market is quite definitely moved into the green, in particular the Nifty Bank. On that point, I hand it over to the Chartbusters team after a very short break.
Co-powered by